Okay, gang, it is time for our periodic check in on the state of the Denver real estate market or just the real estate market nationally. Like to give you an idea of both of those things. And this is the quick and dirty video. And by quick, I mean it's often not quick, but no edits, no fanciness, really just me sitting in front of my computer here and my camera and talking to you and taking you through what I'm seeing in the real estate market and trying to analyze the trends, the themes, and where it's going and put that in context. That's what I try to do with this. So I'm going to try to do that here. There's a couple themes I'm tracking, a couple things I want to talk about. I don't know exactly what I'm going to name this yet, but I want to talk a lot about best time to sell and why if you're selling, it's a real estate agent thing to say like, it's always a good time to sell and it's always a good time to buy somehow. Right now is not the best time to sell. And I'll get into that, but I'm advising most of my clients to wait until springtime, i.e. in springtime, in real estate, we call springtime just after the new year, at least, to think about listing their home. Maybe think about it before that. We can start thinking about it now. But if you want to maximize your investment, it all depends on your situation. But most of the time, I'm advising to wait if you can, if you're wondering about timing. And then I want to look at interest rates too, and look at why they haven't come down really at all since the Fed's meeting, where the Fed cut the Fed fund rate, the Fed cut rates you hear, and oftentimes that gets used synonymously with mortgage rates. It's not the same thing. They do play off each other. But really mortgage rates haven't come down at all since that meeting, since that announcement, since that rate cut. And I'll talk you through a little bit why, and I want to get to that in a little bit later. So we'll get into that. By the way, if I'm not on my A game, I apologize. It's been a busy week, month, year for me working in real estate. So for everybody who has decided to work with me through this YouTube channel or any other means, thank you. It's been a great year. I just looked at my numbers. I just went over $10 million for the year in sales volume, which is kind of a milestone. It's something I haven't crossed before. So that is something that's exciting, but also it's been busy. And so it's one of those weeks where it's kind of been challenge after challenge. And so I'm just trying to keep up with it. And so anyway, point being, thank you for choosing to work with me. For those of you who have, and please bear with me if I'm not on my A game. Anyway, enough about me. Said no real estate agent ever. Okay. So who is this? This is Megan Aller. Yes. If you've watched this market update before, you've seen Megan Aller probably. She is a title rep that puts together great stats. And I just want to go through some of those now to give you an idea of where we are in the Denver real estate market right now. So first of all, this is a graph with a bunch of stuff on it. Don't worry about a lot of it. I never know where to move myself. I'm moving myself there right now. We're going to go with that. Really what I want, so this is basically since 2020 to present day, at least September 24th, present day. This shows both the black line and the blue line shows inventory. Okay. And this just tracks how much inventory there is on the market. So more inventory typically means better opportunity for buyers because there's more supply. And if demand stays the same, well, you've probably taken basic economics. And so what you're seeing here is the seasonal cycle that I mentioned before. Seasonality in real estate is big, especially in the Denver market. And so going back to 2022, here's 2023, and here's 2024. You're seeing and in 2022, it was pronounced. It was crazy. The spring market, you are seeing inventory being very, very low. That's not because homes aren't being listed. Actually, many more homes are being listed in the spring, typically. That's because the homes that are being listed are being sold very fast. There is just more buyer activity there in the spring. And then kind of starting at the 4th of July and moving through the end of the year, you see inventory go up quite a bit. So you see that in 22, you saw it in 23, it went up a little bit more. And now we're seeing in 24. And if you look at this blue line, this is the average daily active count. This is how many active homes are on the market. Right now, we're over 10,000. So you're seeing it's following the same trend, but it is more pronounced than it has been. And it's significantly more. I mean, we were at the same time-ish last year. We were something like 7,000. Now we're over 10,000. So yeah, it's following the same seasonal trend, but inventory is just way, way higher. And that's why I've been saying this is the best buyer opportunity in Denver real estate in the last 10 years. So I talked about sellers off the top, but talking about buyers too. If you're a buyer right now, there's plenty of opportunity, even though there's not as many new listings coming on the market. There are plenty of listings on the market sitting there because they're not selling as fast. Okay. And so If you're a buyer right now, being October, this might be the golden period, the month of October, because in November we have an election. So there's all these factors that cause inventory to be high. I won't talk you through all of them, but just know that after the 4th of July into the second half of the year, fewer people are out buying homes, combined with interest rates kind of remaining higher. I mean, they came down quite a bit these past 2 months, which was good, but still higher. Affordability is still a challenge. Did a whole video on that. That has tempered buyer demand. So seasonality combined with overall health of the market, buyer demand is lower, buyer activity is lower, which means more inventory. So now in October, between now and the end of the year is going to be really, really good time for opportunity if you're a buyer. But with that looming election in November, the expectation that I've heard from the smart people, whoever those are in my life, is that the last really 2 weeks before the election, things will slow down even more than they have, with everybody waiting to see if the world ends before the election. Then the election will happen, and hopefully the world doesn't end, and everyone will see, hey, it's okay. But with buyers and consumers in general, just calming down and kind of hunkering down in October, theoretically, it's going to be a great time to get out and look at homes if you haven't, or if you're thinking about it. There's going to be opportunities for price reductions. We'll look at those. There's going to be opportunities for seller concessions to help you buy down that interest rate. A lot of negotiation power at your disposal as a buyer in the real estate market right now. And that will continue. And I know the election's in November, but even after the election, it's just a slower time of year. So holidays are also a great time to go out and look because nobody else is going out and looking. And so whatever's on the market, some homes will come off the market for the holidays, but if it's still out there, you are going to have much lower competition than you would in the spring. And so, if you're a buyer, you're seeing what this inventory is doing, and I'd get out there if you can. This is odds of selling by week. This is for every listing. Will it sell within the first month? You're seeing here in the heyday of 2022, it topped out over 80%. Even in 2023, the stronger months, it was over 60%. Here we about reached 60% earlier this year in March, which was really our strongest month. Now we're down below 40%. And 36% currently odds of selling right now. Just shows you how much longer homes are sitting. And I want you to keep these things in mind as a seller and as a buyer, both of those things. Move myself up here. See this? Okay. So this is our average daily active count. So we're looking at, I always move myself in the wrong way. We're looking at active versus a balanced market. So I want you to look at this green line, especially for percent of balance. In the past, I've talked about a balanced market, what that means. We're seeing a much more buyer-friendly market, again, than we have in a long, long time. But we're still not balanced. It's still technically a seller's market. We're still only at 45%, there it is, of balance, which is crazy. If we were at 100% of balance, that would be equally buyer and seller. No balance anywhere, or no preference anywhere, completely balanced. So it's crazy that all this has happened, and it's much more buyer friendly, but it is still, technically by the numbers, a seller's market. I don't know what a balanced market or a buyer's market would look like. I'd be interested to see that, because it seems really slow now. I mean, slow enough that we're nearing record low transaction numbers. So a buyer's market would be very, very interesting. But just wanted to show you that because I thought that was interesting. This goes into for buyers, but really for sellers too. So I was talking about listing your home. If you are listed right now, which is not the end of the world, if there's a life event that causes you to need to move right now, you can list right now and figure it out. You just need to understand the numbers and have a good strategy. So this is showings per week per listing. Okay, so right now we're at 1.3, was median showings per week per listing. It's this blue line here. You're seeing it was way, way higher in 2022 and 21. Wow, whatever. It has ebbed and flowed a little bit since then, but it's been much, much lower. Point being, this is a good marker to look at. If you listed your home or are going to list your home, are we getting, I mean, in terms of setting expectations, because some people will get 2 or 3 showings in the first week and freak out because that's not enough activity. Well, you're not too far off the median right there. You're actually above it. Now, in the first week, it's typically better. But as far as maintaining expectations, the important part of strategy as a seller right now is to be patient. Not so patient that you're not listening to the market. And there are many markers that will, when you see them, indicate that you're overpriced or you're not positioned properly in the market. But we want to know what those are. Okay, so if we don't go under contract in the first 2 weeks, that doesn't necessarily mean we're overpriced. And that's why I look at this 1.3 median showings per listing per week. Depends on listing. This is showings versus contracts. How many showings it takes on median to get to a contract. Right now, 15. 15 is the median. Okay, so let's do the math. 1.3 per week, 15 showings. It takes on median to get an accepted offer on your home. I actually can't do that math off the top of my head. But point being, I think I just said that like 3 times, you need to be patient. And that's why it's important to be realistic about your pricing up front and be confident in that pricing. So you're not worried that you need to drop the price just because you haven't sold in the first 3 weeks or even a month. Right now, if I'm confident in pricing for one of my listings, I'm not doing a price reduction, not even considering it before 30 days. And because it's just taking longer to get enough buyers through the home to get you a contract on the home. Yes, there are still listings that go under contract in the first weekend. Happens all the time. This is a median here. Okay, so it depends on area, quality of the listing, quality of the marketing, all that stuff. But you shouldn't be considering a price reduction if you're priced properly, just because your home doesn't sell right away. Patience is a virtue, and it is especially a virtue for sellers in the Denver real estate market right now. And this is median days on market, 26 median days on market. So these are all things, median days on market, showings to contract, showings to listing, that I want to look at when I'm creating a strategy session with a seller. And then I want to go back to when we're looking at how the first few weeks have gone. As long as these numbers are lining up, we're meeting or bettering these numbers, we're okay. If we're not getting any showings whatsoever, that's a signal. Now, hopefully we price the home properly to begin with, and that's a whole other conversation what that means. But that is a signal. If we're not hitting any of these, we're not getting any showings, that maybe there's something wrong with our presentation. Maybe not. Again, it'll depend on the specific situation, but maybe. And so these are 3 metrics I really, really like to look at. We're just trying to get one buyer when selling a house. I know everything used to get 7, 10, 20 offers, but all those were just still for one buyer. So all we're doing is trying to find the right buyer for your home, and it just takes longer now than it used to. So stats are very important in setting expectations, and expectations are very important in how the process goes. And last thing, this is price, maybe not last thing, I lied. Price reductions for pending transactions. Of all the transactions that went under contract, how many had a price decrease? 47%. That's half. Darn near half had at least one price reduction. So you're seeing homes are sitting on the market longer, reducing their price. This just shows buyer opportunity. It also shows, I said, don't reduce the price in the first month. Well, there have been plenty, number one, people do to begin with. And number 2, plenty of homes have been on for 2 months, 3 months, 6 months, longer. It's time for a price reduction if that's the case and you want to sell. But as a buyer, half the homes that went under contract had at least one price reduction. And that's not counting any seller concessions on top of that, or if you're able to get it for below asking price after that price reduction. Really good time to be a buyer right now. Okay, and then so I like to look at just this little graphic here of the highlights for Metro Denver, just to show the story of what's going on and what's happening. So active units actually went up. This is just week over week, so it's not a huge big picture. It's more granular. Pending units went down 0.2%. Closed units were down a little bit. That's a lagging indicator right there. Month supply went up 2%. Showings went up 2%. Okay, days on market stayed the same. So not a lot of activity, but what you're seeing is more active units coming on the market, and there's more actually coming soon. That isn't reflected here, but more have been entered in coming soon status. So we're going to see more inventory come on the market. We're going to see this months of supply creep up. We're going to see active units creep up now through October for sure, and probably now through the end of the year. I do like the total showings were up because that shows that, I don't know if that's helpful when I'm doing that, but buyer activity isn't dropping off. It's higher. And buyer activity did get a good bump in early September, which has sustained after we did have the mortgage rate drop. And I want to show you that too, about what mortgage rates did and why they haven't moved since. We'll get into that. But in a nutshell, good news on mortgage rates overall in the second half of 2024, and that caused more buyers to come out. It has a direct correlation on buyer activity. Okay, This I just got in my email 10 minutes before recording this video. I just wanted to show you this for two reasons. Number one, it's an example of what's going on right now. When I talk about buyer opportunity, you're seeing this all the time. This is a marketing email. Seller says sell. Additional incentive if closed by the end of this month. Seller says sell. All reasonable offers will be considered. Now, reasonable can mean different things to different people. They're not going to sell. This is listed for $675. Sorry, $674,999. Bargain. They're not going to sell this for $550. Okay. But, and this is the second reason I bring this up, if you're in the market for a single family home with 5 beds, near downtown Littleton, I believe, great location near Old Town. Yes. Let's go check out Huron Street. This is the insider knowledge that just goes out to brokers. They're ready to sell this sucker. Sheila, I hope this is okay with me sharing this. And most of this information is going to be publicly available anyway. This was just a broker marketing email. But, can we go in at 500? No. Can we go in 25 grand below? Can we look for seller concessions? All reasonable offers being considered. More below than that? Yeah. When you see this, you are seeing seller motivation. And you see stuff like this all the time right now. So I just try to hammer this point home about buyer opportunity and what's out there. And if you're in the market, it is a much better time, if you can, to go now than to go next spring. And if you're going to sell, and I've advised many of my sellers to do this, if you can wait. You'll have more buyers out. You'll have a better opportunity to get the price you want, hopefully, for your house after the new year. Okay. Now, mortgage rates. What happened? Okay. So the Fed had this big meeting on September, I want to say 16th, where they finally, in much anticipation, cut mortgage rates 0.5%. A lot of people thought they were just going to cut mortgage rates. I said it. Cut the Fed fund rate, cut interest rates, 0.5%. Many projections leading up to it were 0.25%. Ended up being 0.5%. Bigger cut than folks expected. Okay. Well, after that, mortgage rates remained essentially unchanged. What happened here? So unchanged. I told you guys, I'm losing it. Bear with me here. I'm almost there. September 16th or September 17th was the Fed meeting. You saw they've actually gone up a little bit since then. We're seeing this is Investopedia saying the average mortgage rate is 6.22%. I think that's pretty accurate. I'm seeing a lot of 6.2. Mortgage rate's going to depend on a number of things. What you get is going to depend on your credit, your down payment, many other factors. But as far as an average, 6.2 is pretty good. Now that's down from even in July over 7. So that's great. But why didn't they go up, or why didn't they go down? Why did they even come up a little bit on average since the Fed meeting? Many of you probably know this, but in case you don't, like I said before, the Fed fund rate, which is what the Fed's actually cutting or raising at their meetings, and is tied to mortgage rates. Mortgage rates react to that, as I believe all consumer interest rates do, but it's not a direct. The Fed doesn't directly control mortgage rates. So what happened was the anticipation leading up to that meeting. Like I said, many expectations were the Fed was going to cut interest rates. A lot of people thought it'd be a quarter. As we got in the last week or two before the meeting, many more projections started coming out that said it would be 0.5%. They ended up being correct. So the markets already priced that cut in. The market always anticipates these things. And so the mortgage rate, the mortgage market basically already cut its own rates to meet that anticipated Fed rate cut. And then the cut happened as anticipated. Mortgage rates sort of just hung out there. That's how things go, and that's how things are going to keep going. The mortgage market, interest rates on mortgages are going to keep anticipating what the Fed's going to do and keep reacting ahead of time accordingly. And so many people think there are more Fed rate cuts on the horizon. When and how many, who knows? But what you should see is mortgage rates to continue to trickle down. Now through the springtime, they could be relatively unchanged, but getting closer to 6%, even a little under 6%, I wouldn't be surprised to see that. And if mortgage rates come down to in the 5s, combined with much higher buyer activity in general in the spring market, it's going to be an amplified version of what I was talking about before. So if you're a buyer, there's going to be a lot more activity, a lot more competition out there in the spring, especially if rates go down significantly. And that is going to mean, depending on the home, there could be multiple offers. You could be having to go over asking price, all that other nonsense that we dealt with for the last few years until really second half of last year. And if you're a seller, same thing. That's what you want. You're hoping interest rates come down, and you're hoping the country's still around after this election, and that's going to give you the best chance to capitalize on your investment by selling in the spring. So that's all I got for this update, guys. Thanks for watching. As always, if you made it all the end, made it all the way to the end through my fumbling, you're the best. Would love to help you out with any real estate questions. Please do reach out. It's my favorite thing when people reach out from the channel, and would love to talk with you about it, if nothing else. So my contact information is all over. You are the best. Talk soon.